Accounting documents. Before recording the financial operation in the books and accounting records, it is necessary to make sure that there are documents proving the occurrence of the financial operation. Importance of the document. The document is used as a means of proof to confirm the correctness of the financial transaction. And also the document is used as legal evidence in case of disputes. Types of documents. Direct documents. These are the documents that are prepared by the enterprise directly and are considered the main source of registration in the accounting books, and they are as follows. Arrest document. It is a document that the entity prepares when it receives a cash amount from the client, whether the amount is in cash or by a check drawn on the bank, and the payer receives a copy of it, and the other copies remain in the entity to record the financial operation in the accounting books. Exchange document. It is a document that the entity prepares when the entity makes cash payments or when paying its account, whether the payment is in cash or by check drawn on the bank, and the recipient of the amount receives a copy of it after he signs his receipt on the document, and the other copies remain in the entity to record the financial transaction. Registration document. It is a document that the entity prepares when a financial transaction occurs that does not include payments or receipts, so that the financial transaction is then recorded in the accounting books, such as the term sale, on the account. Indirect documents. These are the documents that are attached or reinforced with direct documents as a means of proving the financial operation, and they are as follows. The bill. It is a statement prepared by the seller, which includes a detailed statement of the service provided or the goods sold, their quantity and total value, etc. The invoice is considered a sales invoice for the seller, and for the buyer it is considered a purchase invoice. The check. It is a written instrument containing an order addressed to the bank from the bank account holder, the drawer, to pay an amount of money to a third party called the beneficiary. When the beneficiary receives this check from the bank account holder, he goes to the bank, and the bank, after authorization, pays the amount to the beneficiary after deducting the amount from the drawer's account. The bill of exchange. It is a written undertaking in which a person undertakes to pay a certain amount on a certain date to another person called the beneficiary, and may be debtor notification. It is a paper sent by the establishment to the client to inform him that the value of the outstanding claim. Dr. Mohammed Baram Channel.